Hemos visto intereses subir, dispararse el 2 años por encima de niveles de 2007. Datos económicos que tanto en el empleo como en los servicios de PMI sorprenden y por eso los intereses están rebotando esperando que la Fed tenga que subir en julio. Y mientras tanto unos índices que, bueno, que están en negativo, sobre todo en Europa y China y Asia, han estado mucho más negativos. En Estados Unidos, a falta de una hora para el cierre, un poco menos, estamos viendo el Dow Jones que sí que cae un 1%, el S&P 500 cae un 0,73% y el Nasdaq un 0,75%. Si miramos, para analizar todo esto, vamos a contar con nuestro invitado internacional de todos los jueves, Jay Kaeppel, Senior Research Analyst at sentimenttrader.com. How are you, Jay? Thank you for coming again.
I'm doing well. Thank you for having me back.
Well, it's always a pleasure. I think we have the first graph, as always, showing the big four names, Apple, Microsoft, Nvidia, and Tesla. Some thoughts on whether they can or will continue to lead this market. Do you think they can still make some progress in the price? They can still going up during after this rally?
Yeah, well, like you said, I call them the big four because these are the four stocks that have really driven the rally so far this year. And a couple things to note: first off, when the largest and arguably world are performing well, that's a good thing. So, people are getting a little nervous because these stocks have gone so far so fast. It's almost certain they'll have a pullback at some point. That's just the nature of the markets. The question really is, will they follow through in the end? Because here, it's a big question here in the U.S. because they make up a large percentage of some of the index funds, the S&P 500 index. So it makes a big difference in some of the growth indexes. And I can't really predict if they're going to follow through or not, but the question is this: if they do follow through, the answer is simple. The rally will just keep rolling on. If they don't, then the question is going to be, will new leadership evolve or appear? And that's kind of what some of the other charts today speak to.
That was what I'm going to ask. Talking about this leadership, where should we focus on sectors? We have a chart that shows industrials and technology. Technology has been leading this rally,
Right.
as you said. And what about industrials? They're approaching some kind of resistance that could be a nice breakthrough, right?
Right. So these are two very simple charts for investors to keep a very close eye on, because I think they're going to tell us a lot in the weeks ahead. These are two of the leading sectors. Technology is up over 50% from its low, and industrials are almost 30% from their low, even after the recent decline last few days. But as you mentioned, they've kind of bumped their heads against resistance. So the question is, will they break through or won't they? And as always, I can't predict which way they're going to go, but I do know that whichever way they go, they're going to tell us something very important. If these two break out to the upside, just like with the last four stocks, the rally is intact and the bull market will continue to roll on. If they fail to follow through, then I think we're going to see some consolidation in the market, a little more of the summer choppiness that I talked about last week, more of the sell in May kind of environment. So I would strongly suggest keeping a close eye on these two for some very important clues.
An eye on industrials for that breakout. And also talking about financials, you told us, Jay, some weeks ago that seasonality was doing good, or we had kind of some signals that financial could be a really interesting sector for the next month.
Right. So when I say I'm looking for new leadership to evolve and appear, I think financials is one to keep an eye on. As you know, earlier this year we had some banks fail here in the U.S. and there was a lot of the narrative was doom and gloom and the banks are going to collapse and everything's going to be bad. Well, lo and behold, what happened, as we can see in this chart at the bottom right-hand side, corporate insiders in the financial sector. We're looking at ticker XLF, which is an ETF that tracks roughly 100 or more financial companies. The insiders in those companies became huge buyers as that sector plunged. And what's interesting to me is even though financials are now about 10% off their lows, the insiders are actually buying more now than they were at the lows. So historically, if we look at some of the numbers at the bottom, it tends to follow through. So we're hoping for the best, but I would not be surprised to see this sector continue to surprise people to the upside in the year ahead.
We'll keep an eye on the financial sector. And finally, another sector showing some strength, quite a strength, as you said, is the real estate sector. What do you think about this? Right now, showing also that the sentiment for the home builders is increasing in the last months.
Yeah, so this one is kind of a contrarian play because real estate's been kind of a rough sector for the last year. And in fact, if we look at performance on a relative basis, the real estate sector versus the S&P 500, that relationship is almost at a 10-year low. So as a trend follower by nature, it kind of goes against my grain to be looking here, but it's beaten down so far. And what's really got me looking here, fourth chart, the top is the annual seasonal trend for this sector. And if we take a close look at it, what we normally see is a bottom sometime in the October time frame, then a rally into the end of the year, a little choppiness early in the year, and then kind of a stair-step advance into what you see in that green box, which is basically late June to mid-September, tends to be pretty bullish. Well, if we look at the bottom chart, which is what this sector has actually done in the last year, we saw an October low, we saw a strong rally into the end of the year. So far this year, we've seen kind of a stair-step advance, and now here we are working our way into that bullish seasonal period, and the sector has also broken out above its 200-day moving average. So this is not really what I would consider a long-term play. This is more of a speculative trading situation, but I'm watching closely. I think this sector may surprise people a lot in the next several months, and I said it could be one of the new leaders that would surprise people if some of the other sectors falter.
Yes, it will be a contrarian play, and very interesting, Jay, very surprising, with rates going above 7% right now, and also in the fixed income market, raising a lot. Thank you very much. As always, Jay Kaeppel, it's always a pleasure to have you here, and also to have the best platform, sentimenttrader.com, to check all this data that you bring to us. Senior Research Analyst at sentimenttrader.com, Jay Kaeppel. Thank you very much.
Thank you. Bye-bye.